Hey, it's Walter here, and I want to share with you something that happens for a lot of traders, and it just nearly happened for me, but I think it's something to guard against. If you've ever traded, if you've ever bought a car and it would just turned out to be a lemon, like for example, I remember I had a perfectly good Nissan, and I sold it to a friend of mine, and then I bought a '69 Volkswagen bus, combi van, they call it down here in Australia, but we call them a bus over there in the States. And it was basically a lemon. Like it literally died the moment I brought it back. I was in college and drove it back to the dorms, and it literally died. Like I went there and parked. I was all excited, and I asked some friends, "Hey, do you want to go out for, should we go for a ride or whatever?" We went for a ride, and it didn't start. So it was a lemon, and what that did for me is, like, I'm never gonna buy an old VW again. I just don't want to buy an old VW again. It was a real pain getting that thing going, and there was all kinds of problems. It was a lemon, basically, or I didn't know how to drive it, and I drove it the wrong way and made it weak or something. Something was wrong with the way that that experience, and so I swore I wouldn't buy an old VW again, and I haven't, but. The problem with trading sometimes is we do the same thing. And I'm going to share with you, this actually is a trade, one of the trades in the Small Accounts, Big Profits course. If you haven't seen the course, you probably should check out the bigprofitscourse.com link. Go there and it'll tell you all about the course and how the goal is to take this small little $1,000 account and ramp it up to 100K. And so I was in this trade here on the New Zealand yen, this is, and what happened was, I think I got in on this candle right here, I do believe. Sorry, it would have been this candle right here. Sorry, actually would have been this candle right here that I got in. It retraced against me, went down, closed for the week, and then on the Monday it gapped lower and it went all the way down like this at the open. Basically, the first couple of hours, I think it was the first hour and a half of the week, that it did this. Now, this move right here, although it didn't get to my target, it actually, with the open positions, it represented about a 27 to 30% gain on the account just on this move. So it was quite tempting when I saw it down here to actually pull the plug. Now, I didn't do that because I like to follow my rules. And there was a trader in the Market Wizards, Marty Schwartz, and he talked about how theoretically he could have made a whole lot more money over his lifetime of trading if he had just held on to his trades longer, and he just couldn't help himself. He would just pull them off as soon as they made money. And this is really the same idea that I want to talk about here. Because I didn't pull the plug down here, and I was actually at the charts talking to some other traders. We were watching the charts at the time when this candle was printing. And so I saw this. I saw it move down here. And I actually said to them at the time, I said, well, it's too bad that the market's going so hard in my favor on a Monday, because it's probably going to retrace and go against me later on, and that's exactly what it did over the next couple days. And then it fell again, and now we're basically not totally down to where it was before, but not very far from where it was before. It's only another 70 pips to go before it would be down there. And so I'm going to wait for my exits to get me out, and I use several trailing exits in the Small Account Big Profits course. And the reason why I do this is because I don't know where the market's going to go. I have no idea. But what I do know is that if I allow the market to go as far as it wants, and I only get out once the market shows me that it's going hard against me. In other words, if I use some sort of trailing exit, and we've got a couple that we're using in the course, then I know that I basically have an unlimited amount of profit that I'm allowing the market to give me. If the market wants to move really, really hard in my favor, like it did on that Monday, hey, I'll take it. The trade-off, if you do that, is that you're always going to give back some profit in the end. Like, that's always going to be the case. There's no way around it. If you decide that you are going to use some sort of trailing exit rule, you're always going to give back more profit. You just won't get the max profit. But the trade-off, of course, is that you allow almost an infinite amount of profit to come your way, which is very different from using a profit target. Now, I understand why people use profit targets, and we actually use profit targets in conjunction with trailing exits in the course. The Small Accounts Big Profits course. which you can go and learn about at bigprofitscourse.com. But the reason why we do that is very, very important. And, it's all in the course and all that. You can learn more about bigprofitscourse.com if you want. But in the meantime, I would just encourage you to test trailing exits, because they will always allow you to take more profit from the markets than a target. It's always going to be the case that if you use a target, there will be times when the market will actually go further than your target. So there you have it. I wish you happy trading, and we'll see you soon in another video. Take care.